It's time for another Southern California housing market update where we run through the single family and multifamily numbers for Southern California. We're also going to discuss what makes September of 2022 absolutely unique from a mortgage interest rate standpoint. Hey there, Christian Walsh, real estate agent with Wire Associates. We have been helping buyers and sellers make the best data-driven decisions in this crazy market, and we're here with another one of our every 2-week updates. In this one, we're going to run through the data from September of 2022 and compare 5 Septembers worth of data so we can see where it falls in the trend. So if you're ready to dive into the single family and multifamily numbers plus interest rates for Orange County, LA, San Diego, Riverside, San Bernardino, and Ventura counties, hit that like button and let's get started. Turning to the trusty Freddie Mac survey of the primary mortgage market, looking at the 30-year fixed rate. First off, let's take a look where we started out the year, and you can see that it was in the 3s at the start of the year. Things quickly ratcheted up. They peaked around June, middle of June. Then they actually dropped. And what makes September unique, and we're going to see in the data, is September started out right about at the peak and then went from there up. So September has had the highest mortgage interest rates of any month throughout this year, and we're going to see how this is affecting the sales numbers for Southern California. One more quick thing to note, if you as a seller listed a property a little less than 60 days ago, so we were at around 5% for interest rates, now you can see we're getting close to that 7% mark. And that has happened in about the past 60 days. So somebody who's listed their home may find that there are far fewer buyers for their home right now if they haven't sold. So let's dive into the data. We're going to start with Orange County single family homes, and the numbers are for September's. We're going back year over year, so we have 5 years of data here for the entire month of September to see how September's compare going back. And you have to go back all the way to 2018 to see numbers that are even close from a standpoint for sold and the number of properties under contract. So you can see that we are definitely below 2018 levels for the number of properties that have gone under contract. Looks to be about 274 listings down for the number of properties under contract. So those numbers have dropped. Now here's where it gets interesting, and I did this in the last report. Now we're going to show new listings. And what new listings are showing us is that while the numbers are down, that also the number of new listings is down considerably. That's at a record low. So you can see that while there was some similarities to 2018 from the number of properties closing, the number of listings is far lower right now. Now, on this part 2 of this report, we're going to have the Altos Research reports, and we're going to show you what direction inventory in general is heading, but we're not getting a lot of listings hitting the market. This is very different from times in the past when interest rates have spiked. We have seen the listings spike as well, where sellers feel like it has peaked and they're going to get their homes on the market. We're not seeing that in the data for Orange County. Moving on to LA, the same trend that we're seeing elsewhere. It looks a lot like 2018, lower on the number of properties that went under contract, but the listings are way down. I mean, look at the dramatic difference. So the inventory is not hitting. This is very important. We're going to keep tracking this. Demand has dropped, but inventory is dropping as well, at least from a new listing standpoint. In this part 2, we'll show you what's happening with the overall level of inventory. Riverside. Now, what's interesting in Riverside is how closely the number of sold and number of properties under contract have tracked in the last 5 years. We double and triple checked our numbers because that is so tight how close they are together. And it really is almost a coincidence that those numbers are so tight, because don't forget that sold properties are properties that went under contract in months prior. So they have been under contract anywhere from 30 to 60 days before they become sold properties. So for these numbers to be so close, it's really just kind of a coincidence. But we can see, again, similar trend where we have the number of properties going under contract. That is dropped. So demand is dropping. And of course, demand is dropping because interest rates have gone up so quickly. In the past, at just about 60 days, they've gone up 2 percentage points. That's a huge increase. So some of these properties that closed actually closed at a 5% mortgage interest rate, whereas now if you're going under contract, it's going to be closer to 7. Moving on to San Bernardino, another one where the number of sold and the number of properties under contract was closely tracking in these few different years here, almost indistinguishable, 2018, 2019. Similar trend with low level of properties under contract, demand dropping, but also low levels of new listings. We're not yet seeing, from the new listing standpoint, we're not seeing an increase in new listings. In Ventura, we've got lines all over the place. Ventura is one where demand definitely sinks. When there's bad news, the number of properties going under contract sinks, but listings are down as well, so that's offsetting it. You can see that Ventura is a spot where demand falls. Now, they're not a bellwether of things to come, because we've seen this happen in the past where demand was down and then the next month it was back up. They really march to their own drummer, like I always say. In San Diego, good old San Diego, we have the same darn trend. Nothing has changed. You can see that listings are down. There's a little bit more of a gap between the new listings and properties going under contract in 2022 versus 2021, but still a market where we're not seeing a big increase in new listings coming. Moving on to the multifamily numbers for Southern California, one of the only places you're going to find it. Comparing September's going back in Orange County, you're going to see this same trend in the rest of the counties, and that is new listings are down. In some counties, it's almost all but dried up, almost no inventory coming, but demand, the number of properties going under contract, that is still strong. Now, 2021, there was a bigger surge in the number of properties that went under contract in September, but we still have a solid number, 55, that matches 2019. And the fourth quarter for multifamily is often a very strong, if not the strongest quarter, as folks are making changes to their portfolio, maybe want to do a purchase before the end of the year for tax reasons. So let's see as we get into the fourth quarter what happens. LA, we can see that the number of new listings are down, but we're also down in the number of pending sales. So this is the lowest level of pending sales we've had. Now, this could be attributed to the LA County and City eviction moratorium. They are still in place in Los Angeles, which makes it difficult for a landlord to get a tenant out who's not paying rent, which, as a multifamily property, it is an income property, and if the income isn't there, you could see that the landlord may not want to put it on the market, maybe isn't interested in buying any more if they have some properties that have issues like this. We will have more content on updates to the eviction moratoria. LA City has just made a big announcement on the end of theirs. And Riverside, here's one where we see a big drop in the number of listings. You compare 2018 versus 2022, and we're at half just about of the number of listings this time of year that they had in 2018. And you can see that there's actually stronger demand. So those new listings and the pending sales are very, very close together. Now, the number of properties that is sold, that happens to be down. But what's important to see is the demand is still very strong in the Riverside multifamily market. San Bernardino, you can see a similar thing, that inventory is down. Now, in their case, we also have pending sales down, and maybe buyers and sellers in San Bernardino are hearing the bad news and are deciding not to list and deciding not to buy. I will tell you that multifamily is still a strong investment and will remain strong through any sort of potential recession we have. People are not going to be buying homes, but they will still need to live somewhere, so they're going to be turning to rentals. The rental market will stay strong. And Ventura, another one where things are all over the place. Only one property went under contract the entire month of September, which is actually, when you look at past years, that is a very low number. And maybe in Ventura, it is, again, watching the bad news and the fact that interest rates have gone up. Maybe this is making it tougher for properties to pencil for investors in Ventura. But in general, this again is a strong segment of the market. And finally, San Diego, we can see that inventory, just as we've said a few times before, inventory is down, demand is still strong. It's stronger than it was in 2018. So more of a seller's market in 2022 for multifamily than it was in 2018. So there is your multifamily market update for Southern California. So as you can see, the numbers are down for Southern California counties, but we don't yet see an absolutely, completely cataclysmic drop in numbers yet. Demand is down, that's undeniable, but interest rates also went up a full almost 2 percentage points in the past 60 days. And listings are down as well when we still have these low levels of inventory as compared to even the low demand. It's still a solid market out there. So what do you think after seeing these numbers? Were you expecting much less demand, or is that a low enough level where you think we're going to have big price drops? How about the levels of new listings? Where do you think all these sellers are? I've got some ideas on where they are, and I'll make sure I share in future content. Let us know in the comments below where you think the market's headed. Do you think we're right on the edge of the whole thing collapsing, or are we going to continue to truck along at these levels? Don't forget that part 2 of this video will dive into the median home price for those respective counties, and we'll also discuss inventory levels plus a whole lot more from the Altos Research Reports. You can subscribe to those. We have a link below so you can do that. And if you do subscribe to the Altos Research Reports, you'll get our free weekly email newsletter where we give you market updates plus legal updates and a whole lot more. You're not going to want to miss this next video for the Southern California housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.